Average is one of the most important insurance concepts you need to understand. And today I'm going to try and explain it to you in such a way that anybody can understand it. And I will tell you what you can do to prevent average from ever happening to you. But before I do that, we need to listen to this. These videos are not intended as advice. It is purely for informational or educational purposes. Policy wordings and terms and conditions differ. Please consult your own policy wording to see what is applicable to you and what not. And very importantly, please consult with a broker or your insurer before making changes to your policy. Having said that, let's dive into our topic. Google actually knows a lot about insurance, so I will share two Google definitions with you. The first one, in terms of the average clause, you are required to insure your assets at their full value. If the sum insured at the time of the loss is less than the insurable value of the property, the amount claimed will be reduced in proportion to how much you are underinsured. Let's look at the second definition. The average clause is defined as a clause in an insurance policy requiring that you bear a proportion of any loss if your assets were underinsured or insured for less than their full replacement value. Underinsurance is expressed as a percentage of the full value, and that percentage is applied to the claim. Normal language. This is just another way of saying that if your property is insured for less than it would actually cost to replace it, your insurer will pay out only a percentage of your claim. When average is applied to a claim, people often claim that it is very unfair. But is it? Let's play a game. You and I own a flock of 100 sheep and they are marked as us. We do not own individual sheep. We jointly own the flock. One night, the baboons get into the sheep pen and kill 20 sheep. Next day, I call you with the news that the baboons killed 20 of your sheep. And your first question should be, how do you know it is my sheep and not our sheep? We jointly own the sheep and therefore share the loss in proportion to ownership. So surely, we each lost 10 sheep. And that is average in a nutshell. We cannot talk about average unless we talk about underinsurance, because underinsurance is at the heart of average. When you insure something for less than the replacement value, you underinsure and you take on part of the risk. If you insure your house for R1,000,000 instead of R2,000,000, in other words, 50% underinsurance, and then the house burns down to the ground, the insurance company will pay you R1,000,000, but then you still need to come up with R1,000,000 out of your own pocket to get back in the position where you were before the fire. It's a 50% underinsurance. If your house burns and the damage is 500,000, the insurance company will pay you R250,000 based on a 50% underinsurance. It is like the sheep. You cannot distinguish who an individual sheep belongs to unless you mark it specifically. Let's look at a real-life example. A client had a water pipe that burst at his house. That caused water damage of R35,000. I once had a claim for this type of water damage for R225,000. Imagine that scenario with a 30% underinsurance. The assessor went out, found that the house is insured for R1,600,000, but the real value should be R2,300,000. It's underinsured by R700,000 or about 30%, which leads to a payout calculated like this. 35,000 times 1,600,000 divided by 2,300,000 gives you about 69%, and the payout is 24,347 Rand. Now imagine, you started with a claim of 200 and 25,000 rand. This client had to find 10,000 rand from his own pocket to get his house back to the condition it was before the loss. That's the danger of average and underinsurance. The message is very clear. Do not try to save money on premium by underinsuring. The wonder of insurance is that the premium is very low relative to the insured amount. In our example, it would cost 175 Rand per month more to insure the property for 2,600,000. Or put differently, you have to save the insurance premiums for a very long time to make up a loss because of average. It will take almost 60 months or 5 years to save 10,000 Rand with 175 Rand per month. The second mistake that people make is that they thumbsuck their values. You would get to a client and you would ask him, for how much should we insure your house? And he would say, 1.6 million. And neither the broker nor the insurance company are valuers. So the best route to follow is to ask a building contractor in your area what the per square meter cost of a house like yours would be, and then calculate that and get to a good estimate of what the replacement value of your property should be. But please do not thumbsuck, because it leads to underinsurance, which leads to average. Average always has a very emotional aspect to it. And there's a huge difference between sitting there listening to this video and receiving that letter that says your payout is going to be 10,000 Rand less than your loss, and you have to make up the difference. Please make sure that all your insured values are accurate and at replacement value. In the description below, there is a link where you can download an inventory form to help you calculate the value of your home contents.